Good afternoon, traders. This is Christian from Hertz Market Trade Group, and it is Monday, March 7th. Nasty day for the markets. Overnight continuation. What made things a little bit more difficult if you were looking to play anything from the long side was just the move up into the open this morning. Kind of gave a false sense of maybe a little bit of strength coming back into the market, and then the whole day we just grinded lower basically. So risk disclaimer in front of you. Please make sure you read this whole thing here. But basically, we're not talking about any advice, recommendations. Everything that we're talking about is for information purposes only. So where did the indices finish for the day? SPY finished down 2.9%, Qs negative 3.7%. I mean, these are really ugly numbers. You could fill in your own adjective for the price action. The small caps, which at one point were basically flat for the day, I think that was like in the first half hour of the day, finished down 2.4%. Micro caps actually, I guess, outperformed a touch, down 1.4%. TLT was bonds weren't really that big of a mover for the day. They didn't really jump up on my screen at all. Gold, we could put that in the green, was up 1.5% for the day. Silver up slightly for the day. Big move in the VIX, up to now 36 for the VIX. So pretty high number, pretty steep number at this point. We had some more of the metals and mining or I should say commodity plays that outperformed once again. And then things like the utilities, some defensive areas, which we talked a little bit towards the end of last week and over the weekend, that the utilities were really showing some strength. And then you got a lot of red. And it looks like I may have just resorted the spreadsheet a little bit, but a lot of things down well over, 2.5%, 3%, 4%. We're going to look at a couple of these things. So on a day like this, when you've got correlations increasing, when the VIX is this high, there's a lot of stocks that are moving together, right? Certainly there's going to be some names that get in some groups that get hit more than others. But, when the VIX is over 20, your correlations pick up. Right, meaning a lot of stocks begin to move together. Over 30, even more extreme, and we're at a 36 right now. So why don't we start with that? Just looking at where the VIX is, it's the highest closing level, and I think since we've had this volatility, right? A few times we've kind of gotten around this. We've gotten to this high 30 level, and then we sold off like through the session. So it was like a volatility. What's the phrase that I use all the time? Like an episode of volatility, and then we sell off, and then the volatility comes in by the end of the day. Today, there's no buyers that were coming into this market in terms of equities. It's risk off. There's just too much risk right now in the system. I think that people just don't want to get involved, right? They don't know how these things are going to shake out. You've got multiple issues right now with the Ukraine-Russia issue. You've got food prices soaring. You've got energy prices soaring, and companies are not doing business in Russia, which is impacted. For however much money they were generating in Russia, it's going to hit their bottom line in terms of how much money, if they're not going to do business there anymore. And then you don't know as well with the uncertainty are we going to see some conflict with China and Taiwan? I hate to say that and bring that into the picture, but I think that's the next thing that everybody's going to be watching at this point. So a couple of things that you heard me talk about, right? You've heard me pretty much be negative a few times, and I try to be optimistic about the price action or just overall what the markets can kind of bring to the table every day. But that I think, if you watch maybe Wednesday, Thursday's video, I talked about how I didn't like 3 or 4 things in this S&P chart. And I think it's now 4 things probably. But number one, we've been making lower highs, right? So every time that we've tried to bounce since the beginning of 2022, it's been on lower highs, which means the buyers just can't take control of the market. So one, Two, you could even say even in here, maybe we got a little bit higher here. I don't know if I would really kind of classify that because we did kind of get to that level, but let me continue. So lower high here, another lower high here. And what was particularly alarming is that, yes, we could not get back to that 200-day moving average, which is up here, and we failed at the 20-day moving average. So this is kind of what happens sometimes. And I believe that we saw, a couple months back, we saw the consumer staples really start to outperform. That's not a good sign. That means people are just running into, funds are just going into, if they have to be in equities, right? Not all funds can just move to cash. Some of them have to be in equities. So, moving into things like Hormel, right, which I call it like the spam indicator, right, and things like that we saw a bit last week, where just a lot of the consumer staples and utilities were really getting bid up pretty decently on Friday. So, that is not a good signal for the market. So in any event, I stopped at the one thing. Number two, we're trading below the 200-day moving average, which is always, to me, a warning sign, right? Because we've lost the uptrend if we're below the 200-day moving average. Number three, we're below value, right, for the month now. So that's three things. There might be something that I'm missing that was a fourth thing, but and this is the new closing. This is a new closing low for the year, actually, for the S&P. A lot of people are trying to have been also looking at this as in terms of an inverted head and shoulders. Sorry, not an inverted head and shoulders, an actual head and shoulders pattern. It doesn't look good. I will give you a level, which I've talked about a couple times, if we move over to the weekly chart, and that's 40.71. Right, so we almost got there, just a couple weeks ago, right? And I always like to think, because sometimes we get really close to things and we don't get there. But using volume at price, right, in the market webs indicator, 40.71 is a level that I'll be watching if we get closer to that level. Again, am I going to go and buy that level as soon as we get to it? No, but I'll be watching and seeing if we can kind of, hold that, right? Because a lot of times what could happen is we could come in here and we can break it, and then we can kind of bounce back. So, we'll have to see once we get there. And for now, what the other thing that I'm noticing too, which I'm sure, like, most of you in the TTG trading room are aware of this, but every time we seem to bounce, right, and we've talked about the bounces having lower highs, but they've been good places to sell. Here's just the price action for the day. Notice that so here's what makes things kind of difficult is, why was this going on? I don't know. There was rumors that there was another meeting, I guess, and Russia did say that they said that, hey, this is what for negotiations, this is what we'll accept. And the market rallied a little bit on a couple of those things, some headlines this morning. But notice we got to the top of value, which again, we're seeing this all the left and right where we're supposed to kind of turn the corner. And volume at price is really giving you clues on that. All right, so that's the S&P, which was down big today. Qs are even more of a mess, right? So you could look at NASDAQ futures, or if you want to look at the Qs, you could certainly look at the Qs, but weekly bottom of value for the Qs is 297.74. I think that goes further, right? I mean, I think that the price action goes further. I hate to be negative. Like, normally, when we were in years past, we'd have a down day and be like, okay, this probably will be a decent dip to buy, right? And people were always looking for a dip to say, okay, I'm going to buy this dip. That has not worked well in 2022. And it just tells you that we're in a different market right now. And the best thing that I could say is just to be patient and let this work its way through. Now, this 297.74, notice how that lines up with last year's value area. That was a real nice touch off the top of value, but way back in March of last year. So, we're giving back a lot of this move at this point, and I think this is where we end up getting. I don't know if that goes in a straight line, but I think that's in the cards, right? So, one of the things that I've talked about, or a couple a couple of times I've mentioned this is, this is the weaker of the index. Well, has been the weaker of the indices over the last month. I would continue to, try not to really get too involved in this group personally until it acts better, right? Until it kind of, there's been some more bright spots in areas in the S&P as well as even in the small caps a little bit too. But yeah, so that's what we're looking at. And, I almost hope that this happens like if we kind of get this out of our system sooner than later. But it's been kind of a slow, kind of given some tough turns in here, like this big move here in the Qs, right? And then it ran out, right? The same thing, like right around the 20-day moving average. All right, so that's that. I'll keep moving here. But I just wanted to go over some levels. IWM was actually holding up, and like I said, it's actually done a little bit better. It's been just basically going flat. And obviously today is now to the downside, but prior to today, we've just basically been like a new range, obviously this range for a long time, but since the end of January, this has just been in a range. So it could be now that we're, after having a decent amount of digestion, could be that we're going to resolve lower. Here's what the weekly looks like on IWM. It does look different than the S&P and the Qs because the S&P and the Qs are in value for the year. The small caps are not, right? And, a logical place for this to come down to would be somewhere in here. But again, first thing I would watch would be 190, right? This is an extension away from the 2022 value area. And we found some support there at 190. We've actually been able to kind of bounce there a couple times. So that's what I'm watching. Let me talk a little bit about the energy names. And, this is why this market has, for a number of reasons, has not been easy. When you look at the energy names, right, here's what crude did for the day, right? So this is where the most interesting trading has been over the last week or so. But look at the bar in crude today, right? So toppy looking bar for this. Would I buy this? No, I wouldn't. Maybe this kind of can come in and settle down a little bit. And then also, if you look at some other commodities, a big reversal bar in copper down 3.9%. So here's Palladium, which these things went nuts overnight. Wheat is another one too, which I know everybody's talking about that one. Wheat futures were up 7%. So, these things I've been trying to kind of position lightly where I see some opportunities and then take profits, so here's the trading blotter for me for the day. I even took some profits on some things pre-market. All right, I took some profits on gold and NOV, which was up like at one point like 20%, I think today. It closed up 16%. It almost took out that VPOC at 23. But again, I don't want to be super greedy with this market, just considering how dicey it is. So I'm happy to kind of take some profits here and there. I've been holding Valet, which I got another target in that one. This NOV I did take off today. CSX, right? The rails were acting well. They did not close, oops, right? This actually finished down on the day. So again, you just have to be a seller into this type of strength. UNP was another name that I talked about. Actually, finished down on the day after hitting 270, right? So big moves, big intraday moves. Yeah. And, my opinion is, of course, my opinion, but you have to be selling into some of these rips, right? It's just too hard to tell if a name is going to continue to go, and you can leave the last portion of the trade on. I did that. I'm still long some CSX, right? And I'm still long like a couple other small trades. RTX, I put on a trade. This Raytheon hit the top of value and then closed down on the day. So I took that trade off. 103 was a nice level, and that could have been, it just wasn't enough of like a big enough move for me. And I try to kind of say, okay, well, let's see if we can now get through value. Nope. And actually like closed on this lows. So I'm okay with taking that thing off. Regeneron is a name. I think Regeneron actually held in there a little bit, but this is a name that's super The price action is super tight. So I'll continue to watch this one. You know, didn't do badly today, down 30 basis points. So that's it, guys. I'm holding just a few remaining positions. You know, a couple positions like the last piece of Valet. I'm holding a little bit left of the CSX trade from Friday, and a few other small ones. Veggie, right? I took a target in this one. Right, this is the food ETF, I call it, but it's actually you know, a lot of things like, I mean, this also had a reversal bar, right? So I had some questions about, like, even though like some of these names are down a little bit, right, that have just been, you know, going ballistic, and I think they're just, many of these things are just really extended. Like if you look at the XME, I got a couple questions about some of the steel names, right? But you know, the signal for XME was basically back here was your break, and even a little bit of consolidation and a break higher. This was at 49.50 bucks, right? This topped out at 60, right? So I personally would like let these things find a, you know, put in like a bull flag, you know, digestion, maybe let this 20-day moving average kind of catch up, you know, somewhere around in here, but it is a breakout. So you might see strength return here, but I just think they're just way too extended, and they're in need of some more profit taking. And then we'll keep an eye on that group and see if it kind of set up again. One group that we talked about too, which I think is really ugly, right? Consumer discretionary, XRT. Right. I think we talked about this in one video towards the end of last week. Right. This is, you know, things that are going to really kind of hit the customer, you know, hit consumers as higher gas prices. So I'm not surprised that this was one of the worst performing groups today, just because it's eventually, you know, you see everybody on Twitter tweeting out what their gas prices are in their state, and you know. Listen, I think that going into EV, you know, having an electronic vehicle would be great, but not everybody can afford that. So I saw that today. I saw a video clip of a politician talking about, well, yeah, great, you know, well, you should all buy, you know, electronic vehicles. Well, that's great if everybody can afford that, but not everybody can afford that. So, you know, that's why I think consumer discretionary stocks are going to move down. But you have to laugh at some of this stuff. I mean, that's a great idea. And I think, you know, when you look at the overall energy consumption, right, I think that the way of the future is more alternative energies and so forth. Not to talk politically here, but those things are just they're not all ready yet, right? And I think everybody would be loving it if solar panels and alternative energy would be able to replace all of the energy, but it's not there yet, right? And it may not be there for years. So, you know, there has to be some type of middle ground. And you know, it's a really one of these things where you just kind of have to shake your head, because we're just not there as a country yet in terms of that. And I think most places globally, right? You know, I wish that we could extract more energy from some of these things, but you know, it's not there yet. And you know, I wish some of these politicians would understand that and understand that we're going to get there in a few years. But for the time being, right, you got to come up with some other solutions rather than just being a politician. So anyway, sorry to talk about that. But you're going to see for now, you know, consumer discretionary stocks, you know, even the ones that I liked as reopening plays, right? There's too much of a headwind right now. So we'll see how things play out. For now, you know, with the indices acting like they are and stocks acting like they are, I'll continue to be more defensive. I do get excited when we see different groups, you know, like we saw the commodity trade. You know, there's a lot of trades that we kind of picked out there in that group. But some of these things have to kind of come in a little bit, and this overall market has to get a bit better. You can't just grind down like this all day long with the VIX at 36. Not a healthy market right now, and we hope it improves. Good luck, guys. Have a great night, and see you tomorrow.